Happy Saturday, everybody. I'm going to be out and about all day long, so I'm actually recording this Friday night just to give you some content for Saturday. I want to thank those who have clicked this button here, the donate button, as a thank you for the content here. And I'll note that there's just one ad on the site right now, but you're going to see a little bit of a redesign next week where there'll be more ads. So it's not going to be like plastered all over the place and pop-ups and everything, but you're going to see a few more ads because I work really hard on this, and it'd be nice to get a buck or two for all my effort. So some slight design changes forthcoming. Well, from a charting perspective, the market's really, really interesting these days. And in spite of all the intervention, I find this to be a really technically friendly market. A lot of really, back in the first half of this year, I was really starting to lose faith in technical analysis in general. But even with the current intervention, things are behaving awfully interesting. Let's take a look first at the euro. And let me just do something right here. The analog between, it's kind of a triple analog, but mostly between 08 and current continues to hold. But forget that. The important thing is this trend line right there. If we can take out the lows established on the 24th of November, then we can resume party time. It was kind of nice today because let me point out very importantly, this past week we just finished, some very interesting on an intraday basis. So euro was kind of farting along here. Massive central bank intervention, whoosh. God help those who were short in the effects. I stopped trading Forex ages ago because of this kind of thing. And resume farting around mode. And here's the cool part. What should have been a exciting, robust, thrilling breakout, boom, up to infinity and beyond, just completely fell to pieces. And this is very damaging for the euro bull case because it should have shot higher. It had everything, back here, it had everything going for it. Everything going for it in terms of liftoff time. And it just, did not do well. So having said that, again, I say what we want to see is a piercing of that trend line, which would require a drop below 1.32. If that happens, it gets cool really fast, particularly since, and I emphasize this, they continue to shoot their wad. It's a bigger and bigger wad, but one of two things will happen. Well, I guess they'll never run out of tricks. They can print money infinitely, but there will come a day where they pull a stunt like Wednesdays and the market flips it off and says, screw you. And then they're really doomed because if their games can't fool the market anymore, then they're completely hosed. Then I guess they'll have to, make shorting illegal and things like that. They'll have to go to more desperate measures or start shooting us or who knows what. Shut slope down. That'll be the end. While we're on Forex, let's look at the New Zealand dollar. And this is a cool little trick in profit charts. My first post on Friday was about this, and some smart aleck said, well, you can make an analog for anything, bullish or bearish. It's like, well, let's see you try it. I'd really like to see an analog this good to make a bullish case. Let me scooch this like so. All right, that's not bad. So this is in profit charts of grid, I've sort of kind of lined these up pretty damn well, actually. So here on the bottom, we have 0708. This, again, is the New Zealand dollar. Here on the top, we have right now. And I guess you can see what I'm getting at. And so we don't know what's going to happen after this, but what did happen in the prior time that we had like exactly this pattern was, wow. Oh, God, I have to excuse myself. That's so exciting to see. So interesting, huh? Grid off. So now the ES did some interesting stuff. It was up like 17 or 18 points when the day started, and didn't like collapse or anything, but it kind of eroded throughout the day, especially near the end. And this can't be that encouraging, again, from the bullish perspective. But here's a more interesting graph completely. This is the NQ. This is really cool. So notice how high it got, right exactly in the middle of that diamond, precisely in the middle. And of all things, it fell today. Can you believe it? As bullish as things looked this morning, this thing was up, what, 30 points or something or more? It was up a tremendous amount. And it fell. And so I would have preferred it bounced right off the diamond, but it penetrated the diamond and got exactly halfway up. So I've drawn this line here as sort of a guide. Very interesting. As far as broad indexes go, looking at the commodity index, which the data feed is going to call this the Charlotte Home Price Index till the end of time. It's really kind of exasperating. But this is really topped out. And here again, cool stuff in the world of precious metals, dollar HUI. Let's do that grid again. Let's do that little grid trick that we just pulled. Same idea, same time range. So we will swipe out this area and swipe out this area. And let's see how I do. That's not too bad, is it? Well, it's not great. I mean, this lines up, but these are kind of scaled wrong. Sorry. Anyway, the idea here, though, is that currently we're right there. That puts us somewhere around, summer of 2008, kind of right in the middle of the summer. And as with the New Zealand, like so. So more cool stuff. Now, specific ETFs related to that. GDX, I mean, it was down 3.4% today. Wow. That's a lot on a day like this because, I mean, nothing really. The Dow was down like not even a point. It was just, let's call it unchanged. 3.4% on this. Just smacky-dabby-doo on the GDX. And I really like the GDX as a broad market guide. I've got a small position in silver short with a stop just above recent highs. So 32.62 is my stop. If precious metals start to fall, silver is going to fall the fastest, I believe. I mentioned the Dow is down 0.01%, not even a point. Nice shooting star here, Dow. Mid cap, dollar MID. Very pretty failed bullish breakout here on a very long-term basis. And frankly, even if we get more strength next week, which I hope we don't, I've kind of had enough of that. This week was enough. But even if we do, this remains ugly. Dollar OIX had a bit of a drop today. I point out the fact that the weakness here beneath the trend line suggests that any further weakness will violate that trend line again. Here's something interesting. Here's the S&P 500. Let's throw in some moving averages there. These are the 50, 100, and 200-day moving averages. Take a peek at this configuration here in which we almost kissed the 200-day, and the 50-day is whooshing higher, threatening to pierce that 100-day. So take a look at that. Got that? Okay. And let's look back here and examine what was going on. Again, sorry to be so obsessed with 2008, but there you go. With prices, in this case, they actually pierced the 200-day, but right there. And the 50-day threatening, and it made good on that threat, to pierce the 100-day. So I submit to you that we are about right here, which is actually May 2008, with respect to these moving averages. A couple of last ones, then we'll wrap this up. Dollar XAU. This is the gold silver sector. Quite interesting channel going on here, particularly since A, it broke beneath the channel, and B, it seems to have a pretty nice allegiance to that midline there. Turned away from that today. And lastly, as far as the wonderful world of financials and broker-dealer index, these have been quite strong this week. I mean, I was, earlier today, like Goldman Sachs and JP Morgan, those were like 8%. Very, very strong day. But I would point out in this one a very substantial island pattern here. Looking at this year, I mean, that is totally abandoned prices. Big time, you bet. And I submit to you also that we ain't getting above that line again. So that's it from me. I am going to return to you on Monday morning. And until then, have a good weekend. And throw a cookie party for your friends. Someone's doing that for us, and we're going to fatten up. So have some fun. Bye.